Hello, I'm Anastasia Amoroso coming to you from the iCapital Connect LATAM 2024 event here in Tulum, Mexico, and this is Beyond 6040. On this episode, I speak with Fernando de Leon, who's the founder and CEO of Leon Capital, and he shares his entrepreneurial journey and the emerging opportunities he's seeing in real estate and healthcare. Then I sit down with Unicorn Strategic Capital co-founder and managing partner Jorge Rovira, who outlines key trends in alternative investment adoption throughout the Latin America region. And for my private market poll snapshot, I'm going to do something a little different this time. We'll be sharing some highlights from the launch and introduction of Alternatives Decoded, your chart-driven narrative for navigating the world of alternative investments. Let's get to it. I am excited to launch something new, something exciting, and something that I hope you will find quite helpful. And that is our Alternatives Decoded chart book, which is designed to be a chart-driven narrative to really help you navigate the world of alternative investments. So it is a chart book, but I would also say it is so much more. We've actually designed a website that you can visit on the iCapital.com webpage under the Learn tab. You could explore the insights within private equity and hedge funds and structured investments. I decided to use some of the slides from Alternatives Decoded today to really kind of reinforce some of the messages and conversations that you heard at the conference today. So let's start with private equity. Why might you want to consider it? Well, because the public markets have been shrinking. And if you look at this chart, you'll see that since 2000, fewer companies went public as they stayed private for longer, which means that the universe of public companies is shrinking while the universe of private companies is actually rising quite significantly. So you can see, for example, just in the United States, there's about 11,000 or so private companies. Compare that to 4,600 publicly listed companies. So private companies, private equity-backed companies have managed to outgrow publicly traded one in terms of profitability and also profitability margins. So that is the key right here to creating value in private equity. There's been a lot of conversation about private credit. There's been some concerns, but the story of private credit is a solid one and is still very much ongoing. There's this conversation about the secular shift towards private credit. And why is that? Well, take a look at this chart right here. This shows you the share of banks in lending to middle market companies versus the share of non-banks. And in the year of 1994, you had about 75% of lending to middle market companies that was done by banks. You fast forward to today, and about 25% of lending occurs from the banking sector. The rest of it, 75%, is actually done by non-banks. The rise in private credit is moving in lockstep with a rise in private equity. But let's take a look at some of the returns and yields that are also possible in private credit today relative to what else you might get in public markets. And for example, looking at the yields in private credit today are still somewhere around 12% because 85% or more of private credit is floating rate and the rates are still fairly elevated. 12% compares quite favorably to leveraged loans, which pull back to about 9%, and high yields are about 7% today. So certainly, that uptick in yield in private credit is the reason for investors to look at this asset class. All right, let's talk about real estate. So I'm going to share with you a couple of charts that really tell that narrative. So first of all, commercial real estate, if you've not looked at the asset class, it's an important one. It's a sizable one. In the United States alone, $21 trillion, that's the value that is represented by physical commercial real estate. And it is multifamily, it is office, it is retail, it is specialty, it is industrial, it is healthcare. It is quite a few sectors. And I know that one of the concerns, I'm sure that might have been on your minds is, well, real estate isn't all about office. Well, 3.2 trillion of the 21 trillion is office. So that's about 15%. And yes, there's concerns about that, but most of commercial real estate is actually located in sectors that have quite solid fundamentals. So an important asset class from the size perspective. And so, for example, on the right-hand side, you see the real estate funds under management have grown consistently. and they're still expected to go from $1.6 trillion today to 2.7 by 2029. So what is there to be optimistic about within commercial real estate? Well, I think a few things. First of all, the entry point, and the second of all, the solid fundamentals. So if you look at the entry point in commercial real estate, on the left part of the slide, you see the year-over-year change in commercial real estate prices. And at some point, it's true that year-over-year, prices were down about close to 20% for the overall commercial real estate index. So one of the factor that matters for real estate is net operating income growth. Why do you invest in real estate? You expect stability of income, but you also expect appreciation of that income stream to at least keep up with inflation. So if you look at NOI growth today, it's not running at 9% like it was right after the pandemic, but it's still running about 3.5%. And that is a very solid number because in the US, at least, core PC inflation has now slowed to 2.6%. Now, some sectors are doing better than others. But if you look all the way over to the right, you'll find industrial real estate, healthcare, for example, are seeing those growth rates that are well above their 10-year averages. And that's why a lot of the managers we work with certainly focus on that space. So this was just a taste of some of the key messages and takeaways that you saw in private equity, private credit, and real estate. We really sincerely hope that this can be a useful resource to you and a one-stop destination and a comprehensive overview for all things alternatives and can help you stay well-informed and certainly well ahead. My guest today is Fernando de Leon, founder and CEO at Leon Capital Group, a holding company overseeing 12 independently managed subsidiaries in 3 divisions of financial services, healthcare, and real estate. Fernando, it's great to have you here today.
Thank you, Anastasia.
Thanks so much for joining us. And, first of all, we're very thrilled about the new partnership with Leon Capital Group and iCapital and the offering that you have on the iCapital marketplace, the industrial real estate, which we'll talk about. But with that, let's actually start with your story. And, what I find fascinating is you've started your career on Wall Street at Goldman, but you've very quickly, I would say, pivoted to the entrepreneurship track and building businesses, scaling them, owning them. And that's what Leon Capital has been about. So why the pivot? What came about?
In New York, on a Wall Street investment bank was a great place to learn and kind of see a global capital supply chain. But I was ready to go back home and build businesses. I grew up in South Texas, right on the U.S.-Mexico border. And so my first, foray into entrepreneurship was really as a translator. I was a translator for real estate developers that were coming from the United States to build manufacturing and logistics facilities in northern Mexico, and I was their facilitator. I helped them build projects and solve problems, and through translation, help them build consensus with constituencies, which is exactly what I've done my whole career. As we developed real estate assets, we have to create relationships with cities, with jurisdictions, with tenants, with companies that we partner with in order to meet their space needs in the industrial business, or when we're building housing. Every municipality is different. So some of those skills that I learned early on as a mediator between 2 cultures and languages, it allowed me to build multiple businesses. And we operate in primarily 3 different industries. And in real estate, where we have industrial, multifamily, and healthcare real estate. And then in the healthcare industry, we have 6 operating companies across the country that operate in different specialties. And then in financial services, we invest alongside RIAs, we invest in the insurance industry, in consumer lending, and we also own a medical leasing company. So these businesses, we've created them all under the umbrella of Leon Capital.
Right, and of course, those are, I would call the lifeblood of the U.S. economy, the small and medium-sized businesses that help day-to-day Americans really go about their business. So here's my next question for you. You've been doing this successfully as a single-family office for the last 17 years, but this is the first time that you are opening up some of your investment opportunities to third-party investors. So why did you decide to make that strategic pivot it, and what's at stake?
Yeah, look, when I started the business, we had very little capital. We had a few friends and family that believed in us early, and I fought really hard to grow their capital. Many of them are still with us. There's a handful of family offices that co-invested with us for the better part of 15 years, but my job has been to compound capital and reinvest it and build new businesses. So when I built, a warehouse in Phoenix and we sold it, we took the proceeds from that and we tried to build another business. Whether it was a dental business or a healthcare company or anything else, there were always businesses that complemented everything else we were doing in real estate or in services. And today, what I realized was one of the things that I had sort of underappreciated was this networking effect of having other family offices invest with us and having RIAs invest with us. So when we started opening up our investments to wealth managers and RIAs, and they joined us, we got to meet these incredible people, whether they were wealth managers or their clients, and these people became part of our opportunity to source new deals or to find co-investment opportunities with them. So it created these network effects that made our constituency much larger. And that's something that I don't think we'll ever go back on. I think we will be a much more sort of open opportunity for others to invest alongside us. And I think you look at this iCapital platform that gives us distribution and connectivity with wealth management firms around the country. We're finding, that's a democratization of asset classes that people couldn't access before. And why shouldn't we connect with those folks and become partners with them and do what we've been doing for ourselves and kind of share that cooking with others?
Well, that is a phenomenal opportunity. I think you're absolutely right for some of the individual financial advisors that are looking for unique offerings in the industry. And obviously, you bring a tremendous track record and success story of doing that. So it's really great to have you on the iCapital platform. And Fernando, my last question to you is, you're used to looking at opportunity sets in the US and globally and across industries. When you think about it now, what are some of the biggest, business stories or growth areas that you're most optimistic about?
Look, I think we build things that Americans need. They need healthcare. They need housing. The products that are stored in a facility that they get through Amazon, they're in our warehouses. These are basic, essential goods and services that we manufacture for the American economy. I am going to continue to do that, whether that is in lending, in healthcare. These are businesses that are all complementary for us. And sometimes we find new things, right? We invested in the veterinary space a long time ago, and I did it because it was a tenant that was in one of our shopping centers. And we got to know their economics, we got to know how the American consumer was reacting to pet ownership, and we saw these trend lines that were fantastic. So we learn things all the time when we're investing in real estate or in any one of our verticals. So we're learning constantly, and we're seeing, for instance, we're starting to make investments in earlier stage companies where we want to be connected to AI and technology, data, and all of those things help us make better decisions. But I think the productivity gains from AI, I think, are hard to overstate. We'll see a lot there. I think everything that we're going to do to schedule appointments in our healthcare companies or to provide better customer service or to make things more efficient and productive, a lot of it is going to come from technology. And America continues to be a place that receives entrepreneurs and immigrants that create great ideas, and all of that is what makes it an economy that it's the best place to invest in the world. I mean, we've looked at many other markets, and I've never seen anything with this level of growth. Even today, at a $30 trillion GDP economy, it still grows at 3 to 5%, and that's remarkable. And it's all because there are very, very good investable ideas in this country.
And entrepreneurs like you. So Fernando, it is indeed America's a special place, and thank you so much for coming on the show today. And it's been really great to hear your story, your path to entrepreneurship, the many businesses that you've built, and it's really exciting that now some of those things that you are optimistic about, the investors will also have an opportunity to invest alongside you. So thank you very much for coming on and sharing your perspective.
Thank you for having me. It's been wonderful. Thank you.
Great to see you. Today, in our Spotlight segment, we're focusing on the growth of alternatives in Latin America. I am here in Tulum, Mexico for our second annual iCapital Connect LATAM event, and joining me to discuss the growth of alternatives in the region is Jorge Rovira, who's the co-founder and managing partner at Unicorn Strategic Capital. Jorge, it's great to see you here in Tulum.
Thank you, Anastasia.
You've spent the majority of your career covering Latin America, and then specifically the last 10 years focusing on alternatives, primarily institutional, but most recently alternatives in private wealth. So just share with us some of the key observations about the nuances of the region and how's the adoption of alts going in LATAM?
So I would say, first, you need to think about Latin America not as a whole country or one piece of land. It's actually many countries, many idiosyncrasies. And when it comes to wealth and alternatives, Latin America was at 0% when the world was at 10 allocation in the asset class. So we're building this from scratch. So when you mix all that and you bring this new layer of opportunity, you need to think about how to basically get into our client's business, understand the business, build the business from scratch. So all processes, risk, origination, operations, how do you bring all that? So think the US 30 years back, adopting alternatives. Given we are the only guys doing this for real with the different players, with the different intermediaries, adoption has been surprisingly fast. We thought this would take a long time. We thought it would take 2 years, 3 years to adopt.
Why do you think it is? Why do you think it's going faster than expected?
People needed it. So one, there was the need to have more decorrelation with the markets, better performance. And two, you had basically this burst of technology, hand in hand with iCapital and the semi-liquid evergreen structure. Everything came together, boom. We've seen huge adoption in the region in the past 2 years.
And so when it comes to alternatives, you mentioned Latin America is not a monolithic, piece of land. And similarly, when you think about the $17 trillion alternatives asset class, there's so many nuances and there's so many sub-asset classes, private equity, private credit, venture, et cetera. So I'm curious, are there specific strategies that Latin American clients gravitate to more than others?
Definitely. When it comes to wealth, again, most investors are income-oriented investors. So in the past 30 years, most people make their money and they invest in long-term bonds, corporate debt, et cetera. They like the cash flows. 60-40 in the US, 80-20 in Latin America, 80% bonds, 20% equity. So when you come in with a new asset class, the natural segue has been private credit. And about 85% of all the flows we've seen through iCapital in the last 2 years has gone to a direct lender.
Right. Do clients have the same expectations of forward returns in private credit than they did receive in the past?
Unfortunately, they do have the same expectations for this next 3 years. So everybody expects yields to stick. We have to be mindful, and that's part of what we do every day with clients, of saying, look, guys, things will change. Whatever you think will happen, rates going down, then the yields will naturally gravitate down as well. Or if rates stay higher for longer, you should expect some changes within the underlying companies and what's going on within the payouts. So if you want to keep the growth within these portfolios, you need to start looking into private equity. And we've seen that. People understand that they need to start moving along the curve in order to keep the portfolio working, right?
So there's this progression in terms of starting with private credit, maybe eventually going to private equity, but also I'm sure there's challenges and roadblocks along the way. So what are some of those and how are you a unicorn working to address those?
So the first is education, right? How do you use it, how to implement it, what role it plays within the portfolio. But then you go to the business side of things and you also need to change mindsets, right? Why does this asset class make sense from a strategic perspective, business-wise, right? How do I implement? How do I change my sales processes? How do I hire different talent in order to pitch this new asset class? How do I run operations and reporting back to my clients? So across the board, we're definitely having to build ground up with many of our partners and clients not only integrating the pitch, but also making it happen within their businesses, right?
And speaking of that, what are some of the other initiatives, along this roadmap to adopting more alternatives in Latin America? And I'm specifically thinking of model portfolios, and can they play a key role in that adoption process?
Latin Americans went from zero alts, to 53 options within the offshore marketplace, right? So you go from 0 to 100 miles per hour, like that, right? So that was actually the breakthrough for the ETF business, when the ETF became a $400 billion industry into a $10 trillion industry, and you had factor ETFs, you had sector ETFs, you had market ETFs. What brought everything together was the model portfolio innovation. What iCapital is doing is following exactly the same recipe. You have a lot of options, you have a lot of asset classes. How do I bring those together in a proper portfolio that will take care of my clients' needs and suitability? Having a model portfolio focused on outcomes definitely makes adoption easier for an FA, for a multifamily office to talk to a client about where do you want to get to. These are the right combinations to get there. People use this as an educational framework, benchmark framework. I mean, there are a lot of applications for model portfolios that definitely get adoption faster.
That's exactly what we aim to solve with model portfolios at iCapital. So Jorge, let's come back to the event that we're hosting together with Unicorn here in Tulum. And what are your impressions? What are you hearing in the hallways? What's the chatter like about alternatives in LATAM here on the ground?
This is amazing. I mean, last year we had 120 participants. None of them were investing in alternatives yet. Most of them weren't users of the iCapital platform. So we tried to focus the event on education, very asset class focused, right? So what's private credit, what's infra, what's private equity, meet the GPs, like start networking with your different colleagues, etc. This year, we have 270 people, out of which 90% of them are current users of the iCapital platform. They're already invested. They're going through all this evolution of their business. So even when you look at the content of the event, it's all about data solutions, operations, product, investment ideas. Where are we going? Your outlook is broader, and now you can speak to an audience that actually is using the asset class. So everything you say is relevant for them. It's so motivating. To tell the truth, and people are happy. Tulum is amazing.
Tulum is amazing, and I certainly echo the sentiment. And it feels like this year the discussion is much broader. It's certainly, includes a lot more participants, and it's also more multifaceted. So Jorge, with that, thank you very much for the conversation, and thank you very much to you and Unicorn for this ongoing amazing partnership with iCapital in Latin America. So thanks so much for joining me today.
Thank you. It's been great.
And we'd like to hear from you. Send us an email at yourquestion@icapitalnetwork.com and let us know what questions are at the top of mind for you and your clients. I'm Anastasia Amoroso, and thank you for joining us today on Beyond 60/40. We'll see you next time.